It is Thursday once again, which means it is legacy review time. What's going on in the legacy realm relative to mainly BTC? Really, the end of the day, the story is about the death of the dollar. King dollar is dying. My own currency, my own motherland, is losing its purchasing power against everything in the world. Historically, this has largely meant things like emerging markets, such as BTC, alternatives of the alternative, are doing quite well. One of the narratives as to why this is the case is because of continuous nonstop money printing, stimulus, Fed buying equities. The list goes on and on and on. But so long as the dollar continues to reach for the core at 88, if it goes sub 88, crypto is going to surpass levels that I think a lot of us aren't even prepared for. So keep that in mind. If the dollar truly goes to the core of sub 88, 80, something crazy like that, if it goes to 2008 levels of madness, not an expectation, but a possibility, then we're looking at, 3-digit, 6-digit BTC prices, potentially just insanity. So as it stands now, 88 is definitely the support for price of Dixie, but it's not looking so hot. This looks like any other altcoin that is just selling off relentlessly, no hope in sight. One concern for the bears is the pace at which this is selling off. This eventually is going to lose momentum. There's nothing more bearish than slow death. This is not a slow death. This is a quick death over the past year, basically since March. So there's definitely some momentum concerns here, which is why I think it'll actually chill at 88 for a minute. We had this brief period of potential recovery, reversal at 90, 93, didn't happen. More stimulus talks, more money printing, more all that other stuff. So 88's the level to watch for sure. And the reason this is important is because crypto, Bitcoin specifically, is strongly inversely correlated with Dixie. So as long as Dixie continues to decline, the bid for BTC should just be perpetual as people look to flee the world's reserve currency. Another interesting thing is gold is largely been non-correlative over the past few weeks. So both of these are the weekly 30-week rolling correlations here. And you can see we had a strong positive correlation with gold that has dropped down significantly. The negative correlation with Dixie remains. The strong correlations with SPX and NASDAQ remain. No shocker there. Money's looking for somewhere to go, and it's not bonds and it's not the dollar. The VIX, which I keep an eye on daily, volatility index, fear index, is around 22 still, even though we have a vaccine, even though we're slowly rolling that out. Ideally, as the VIX declines, momentum for crypto also historically has been bullish. So there's tons of legacy macro evidence that despite price discovery, despite what's going on, maybe on-chain wise, there's strong macro headwinds, as the kids say, in the legacy markets for this stuff to just keep going, until Dixie stops dying, which doesn't look like it'll be anytime soon, especially if stimulus is coming now and in maybe January, February. Two stimuli, if you will. This, it's hard to be bullish on a chart like this in a vacuum, and then knowing the fundamentals behind it, it's like, okay, yeah, they're printing. Here's gold. So gold had a bit of a retracement here after the parabolic banana-shaped situation. It had this multi-year parabola, broke a really strong horizontal resistance. It just kind of went bananas towards the end, puked out the top, and it's definitely settled down. The 1618 fib extensions here look like they're pointing to around 2200. So I do like the bull case for gold still. Again, the macro, the story is there. The table is set. Here's silver, same thing. And I don't mention this enough, but the why coffee and accumulation profile here is just incredibly textbook. If you look at BTC in 2015, 2016, you'd think that was textbook, but this is as perfect as it gets. You couldn't draw this if you tried. The spring especially, it's all there. So anyway, silver is still in its macro markup phase. So the continuation looks fine for silver as well. And the 1618 measured move somewhere around basically all-time highs of 40 to 48. And I think metals are just important to watch just as a proxy of money fleeing into safe haven assets. SPX is important to watch not only for the correlation, but sort of, again, what's the sentiment on what are the richers doing? What are the people with all the money doing? They're buying more stocks, equities, they're voting bonds, most likely. They're seeking NFTs, alternative assets, that sort of stuff. But the technicals for the SPX continue to look weak as it pushes all-time highs on a bearish divergence, arguably. This is the weekly candlesticks here. And it just, we had this spinning top all-time high candlestick into a red week, into a bullish engulfing, into another bullish engulfing, and it just keeps going. So I think this is sort of beyond TA at this point. But there's definitely a bearish divergence there. If you're looking on the daily, there was evidence for higher highs on the cloud, at least, with a bullish TK recross above the cloud. Nice W double bottom here. Cloud support held, all the usual suspects. So there's plenty of reasons on low time frames that this looks okay, but man, this high time frame stuff is legendary. Legendary price discovery right now for SPX and NDX. And again, weekly NDX all-time high, bearish divergence, just like shoving its way up there, slowly melting up. And again, the daily BTC cloud had evidence for that continuation. W double bottom, bullish TK recross above the cloud, that sort of thing. So both of these look fine for higher highs, crazily enough. And I might as well talk about GBTC and BitW, but GBTC is an interesting one because you have to hold it for 6 months before you sell. And there are significant premiums, or at least there were. That premium is shrinking. It's probably around 20% now from spot price. But nevertheless, another good proxy of institutional FOMO, or kind of people who don't know any better FOMO. Because if you can access this in a tax-free way, then you're going to do it versus trying to open a Coinbase or Kraken account. So I think to anybody in crypto, seeing the premiums the way they are is insane. But when you realize that this is an access issue or a tax issue, or even just a cash and carry premium issue where you are buying the premium with the expectation that you can sell it higher later, or you're short spot, something like that, where you're hedged out, and then selling the premium in 6 months, stuff like that. So I think there's more here than meets the eye. It's generally good for BTC if more of it's being bought by Grayscale, supply demand. So more power to them. BitW got a little insane. It was 800% premium earlier today, and that 850% dropped down to 350%. It's Bitwise bot, pretty fun. But this is a top 10 crypto index, which historically actually does outperform BTC alone. So it makes sense to have something like this, even though most of the constituents are less than 1%. I think 7 of the 10 constituents are less than 1% of the total. It's mostly BTC. But this will be interesting to watch if BTC starts to go sideways or roll over and alts sort of steal the show, or alt pairs begin to steal the show. To just watch this top 10. It's like a bunch of junk: Tezos, EOS, Bcash, Stellar, Ripple. But always an interesting sort of non-emotional approach to the market. And then I thought it'd be fun to look at just Tesla and Amazon, because Tesla, it's above the R5 yearly pivot for months now. It's at the 4618 extension of the high to low in March. It's just bubble type stuff for sure on Tesla. Dangerous. Being added to, I think it's the S&P 500 or something. It's being added to some index, so they have to buy, and I don't know. It's a massive bubble, regardless of what you think about the company or Elon. I think the chart is just an interesting situation for sure. And then Amazon, to me, at the R5 yearly pivot, looks more of a diamond top type situation, chart pattern wise, than bullish continuation. If you look at Netflix or Microsoft or some of those other ones, those look more of a flaggy, I guess, a rectangle of consolidation. This looks more diamond toppy. But overall, again, story is all about the Dixie. Just watch that. It's hard to short crypto when the dollar is dying, right? When the denominator is going to zero, then the numerator should be increasing.